Let's start it off, guys. As always, there's 121 people out here, 23,000 likes. Thank you so much for being here. I hope that you can take, we all do, that you can take whatever it is that you need from this show. We are not telling you to go buy Bitcoin. We are not saying that we are Bitcoin maxis. We are simply here to provide as much possible information to you that we have available at hand. And like always, it's a community-driven show. I did mention it earlier. If you have any questions, please write them in the chat. I suspect that the chat will go a little bit wild today. This is not a show that's trying to fight, one camp versus the other. This is really about learning. This is really about trying to figure out what's up and what's down. And if that resonates with you, fantastic. But that is the goal of our show. Bully, anything else? Or Crypto Wheel, anything else? All right, take it away.
Okay. So in order for us to understand why Bitcoin was created, we kind of have to trace this back. Caveman says 1950. I'm going to say 2008. That was the year of a major global financial crisis. We had major banks collapsing, governments were issuing massive bailouts, and essentially just trust in the financial system was probably at one of its lowest points. And the system, I mean, even currently, it still has core problems. And one of the first one is that financial systems rely on trusted intermediaries. Almost every transaction requires a middleman. And if you want to send money digitally, it usually has to pass through multiple institutions, multiple hands before it actually ever settles. And this would examples of that would probably be your banks, your payment processors, clearinghouses, your governments. It passes through multiple hands. The second core problem of the financial system is that the money supply is controlled by governments and central banks. And that means that the fiat supply of the currency, your dollars, can be increased by the central banks, which obviously has cascading effects. It leads to inflation, currency debasement, and a large loss of your purchasing power over time. The third problem that we faced was digital payments were possible back then before Bitcoin, but it relied on trusted companies, your banks, your PayPal, credit card networks, but they were experiencing this issue called double spending. And their solution to double spending was that the central authority had to actually verify these transactions. So the idea behind Bitcoin was essentially to kind of ease the friction points of what they had experienced during 2008. I'm kind of interested to see what Caveman says from the 1950s. But in 2008, Satoshi Nakamoto published a Bitcoin white paper called Bitcoin, a peer-to-peer electronic cash system. And the proposal in this white paper was pretty simple, but at the time it was viewed as very radical. It was going against your traditional financial systems. So instead of relying on your central authorities to verify the transactions, well, Bitcoin would use decentralized networks of computers. It would use cryptography. It would use a public ledger called a blockchain. And that network would be the one to verify the transactions. So this meant that digital money could exist without a bank in the middle. And that was essentially the core idea of why Bitcoin came into fruition. They wanted to create Satoshi essentially wanted to create a system. I said they. But Satoshi wanted to create a system where they could essentially just send money directly to each other over the internet, doing all of that without an intermediary. And this is what people mean when they say Bitcoin enables a peer-to-peer payment. Is there anything you guys like to add into that before I jump into what system Bitcoin actually is?
Go ahead. I'm good. I'm just going to try to change what I'm going to say. Keep going.
Okay. There you go. There you go. So when people hear the word blockchain, I think that a lot of people often assume that every blockchain works the same way. But Bitcoin is actually a very specific kind of system. Bitcoin is a proof of work layer 1 blockchain. And that design kind of affects everything about how the network is actually going to operate. So the system runs on something called mining. And these miners are computers all over the world, and they compete to solve mathematical problems. And when a miner does solve that problem, they get the right to add a new block into the transaction of the blockchain. And as a reward for that, they receive newly issued Bitcoin, right? And this process actually does two very important things that I think we need to discuss. First of all, it secures the network, because in order to attack the network, someone would need to control an enormous amount of computing power. The second important thing is that it distributes new Bitcoin into circulation over an extended amount of time. But that design of the proof of work, it has some trade-offs. So Bitcoin is really good, and it prioritizes your security and decentralization. But with that, it sacrifices speed and its efficiency. So, for example, the Bitcoin network only processes about 7 transactions per second, which is extremely slow when you compare it to modern payment networks. I believe Visa is processing thousands of transactions per second. The other thing that is that one of the downsides to the proof of work concept is that it has extremely long settlement times. A single transaction on this network, the confirmation can take about 10 minutes. And most exchanges, they have to send multiple messages in order for them to receive the multiple confirmations. So that means that the actual settlement can actually take somewhere between 30 to 60 minutes. So overall, the proof of work concept, the system is extremely secure. It's extremely decentralized, which is a great thing, but it is not designed for high-speed payments.
Okay, so one thing, guys, we don't talk beforehand, or very, very little. Built in that way, we don't want to influence each other. We want to come to the table with everything. So as he's talking, I'm trying to figure out what I'm going to say, because it's all kind of mixed in, right? Is there Crypto? Is there anything you wanted to say?
No, I agree with what you just said. I'm just trying to fit where I'm going.
Yeah,
So yeah, I think that was great, Bully. A great breakdown of
100%.
yeah. hmm
I think before you continue, I like to go back in the Wayback Machine. Is that okay?
Yes.
Okay. So most people think that Bitcoin has invented everything, and it didn't. What Satoshi Nakamoto actually did was combine several technologies into the working system. We alluded to 1950. Think of it like the iPhone. Apple didn't invent the touchscreen, the internet, or the camera. They simply combined everything into a revolutionary thing. Bitcoin literally did the same thing, guys. To quote Doc Brown, roads, where we're going, we don't need roads. So we're going to rewind it back 73 years. And don't worry, it's not going to take that long. There's 7 technologies that he kind of brought together that existed before Bitcoin. The first tech was hash functions. In 1953, the first known use of hash techniques appeared in a research on data storage and retrieval for early computers. The goal was simply to find information quickly and in large databases. Bitcoin uses a hash algorithm called SHA-256. For all you guys who are going to talk about what we're going to talk about later, that is your quantum resistant technology. Hash is essentially a mathematical function that takes any piece of data and turns it into a fixed length string of letters and numbers. Think of it like a digital fingerprint. We're going to fast forward to 1970, the creation of a public key cryptography. This is the foundation of ownership in Bitcoin. Simple idea, you got 2 keys. You got the public key and you got the private key. Public key is your wallet address, and the private key is the secret key that proves you own the funds. Example of that, you send BTC, the private key digitally signs the transaction, and then network verifies the signature. This proves that only the owner of the private key sent the coins. The third technology is Merkle trees in 1979 that was created. Invented by computer scientist Ralph Merkle. Merkle tree is a way to verify huge amounts of data quickly. It's essentially what it does. The fourth tech is in the 1990s. The internet itself was already used to peer-to-peer networks. Examples of this were like Napster and BitTorrent. I know we all use those. Instead of one server, there was thousands of computers sharing data. The fifth tech is digital timestamping, invented by researchers Stuart Haber and Scott Stornetta. They created a way to prove when a document existed. The concept documents are linked together using hashes, sound familiar? is basically the early concept of blockchain. I can give you an example. I think it's pretty clear. The sixth tech is proof of work, which Bully just touched on, so I'll skip that one. And so that, anyway, and last but not least, the last one is early digital money experiments. Several projects tried digital money before Bitcoin. You had eGold, which is a failed digital gold system. You had B Money, which was created by Wei Day. It was a proposed thing. It never got off the ground. Obviously, we all know PayPal is the most successful precursor to Bitcoin. For those of you guys who are somehow living in a cave with me, Peter Thiel, Elon Musk, Reid Hoffman, and David Sachs were all part of the mafia. And then you had Bitgold in 2005, created by Nick Szabo, also speculated to be part of Satoshi Crew. Very close to Bitcoin. The idea, it was basically cryptographic puzzles and digital scarcity, which is decentralized money. But it lacked the way to solve the double spend problem, which what Blockchain Bully just talked about. Guys, the double spend problem. So basically, how do you prove that I didn't send Bitcoin twice when it's a digital thing, right? So that's what Satoshi did. He took all of these amazing, long before Bitcoin technologies and brought them all together, and then created the solution of solving the double spend problem. Sorry. In the Bitcoin block, in the first Bitcoin block ever, that was the Genesis block, he put, which is something I thought was pretty cool, the first Bitcoin block ever mined, he wrote, "The chancellor on the brink of a second bailout for banks." What did this mean? It wasn't a random message. It was a headline from the British newspaper, The Times, on January 3rd, 2009. The headline was placed inside Bitcoin's first block to show the reason the system was created, a response to financial systems where banks could fail but still be saved by governments printing or spending money, which is what Bully was just talking about. Bitcoin wasn't a statement at that point. It was no longer just code. It was a response. And that's what Bitcoin, at its absolute genesis, is why it was created. There was a problem, and the problem was far before 2008. The solution was being created. You guys have anything to add?
Very interesting.
I totally had something, but go ahead, Bully, because
No, that was awesome.
okay, so here's what I'll add to that, which you pretty much touched on. But so the ideas weren't born in 2008. They'd been simmering since the 1980s and 90s. You went further back than I did on that. But essentially, David's eCash, that was the anonymous digital cash using blind signatures, but still depended on trusted central issuers, and DigiCash went bankrupt in the 90s. Then Adam backs Hashcash, a proof of work system to fight email spam and make senders burn CPU cycles. This later became the direct inspiration for Bitcoin's mining. And then WeD's, I probably butchered that, but yeah, the B Money, a proposal for distributed anonymous electronic cash with computational puzzles and a public ledger verified by the network of servers. And then you have Nick Szabo's digital gold, extremely close to Bitcoin in spirit, solves cryptographic puzzles to create unforgeable bit gold, time-stamped on decentralized registries, and used it as property without a central issuer. So then comes Bitcoin from these things and more, like you had said. So I thought that was really interesting.
Yeah. I mean, it's the technology for me, like we think Bitcoin was this, like, in your basement, kind of like geeky, not really mainstream. No, it was mainstream. It was 100% mainstream. We just hadn't brought everything together. We hadn't created the iPhone yet. But then they created the iPhone, and they never looked back. I say they because that brings me to my next topic. We don't talk about founder. We talk about founders all the time, and I know Bully touched on this a little bit, but I really wanted to do a little bit of a deeper dive, if that's okay with you, Bully. I'm gonna roll up my sleeves for this one. Who was Satoshi Nakamoto? Oh, yes. Well, he's a pseudonym used by a person or a group, depending on who you ask. He wrote the Bitcoin paper, or they wrote the Bitcoin paper in 2008. He released the first Bitcoin software in 2009, mined the blocks of the network. Satoshi communicated through emails, through forums, through developer discussions, never in person. No video, no voice, no identity verification. At the end of all of this, I want to get back. The reason I want to bring this up is because at the end of all this, I want to touch back on what my view, just mine, about Satoshi and the importance of what he started or what they started, including their lack of identity. What Satoshi actually did between 2008 and 10, obviously we said the Bitcoin paper, the code, but then obviously we all know he gradually stepped away and he handed development to responsibilities to Gavin Andreessen. Why Satoshi chose a fixed supply, and this little part, the 21 million, which I know you're going to talk about, we will. But the part that I love about this is and I've always hated the words. I don't know how you guys feel about this, or chat, how you feel about this. But the words crypto, Bitcoin is digital gold. It's like that bumper sticker title that just, I guess you just say it, but you don't really. Maybe you do. Most people, I don't think, know why people say that, why they call it digital gold. And it's literally, I'm not going to go into tokenomics, don't worry. It's literally it's literally about the digital scarcity. Like the cost to mine and the cost for electricity is what creates that scarcity. And obviously the fact that it's also only 21 million tokens. Some analysts actually call it, like I say, energy-backed money. Similar to gold, historically works as it does. It's scarce, it's hard to mine, and it cannot be created easily. Bitcoin copies the digital idea of that. It requires physical mining. Bitcoin requires computational mining. The idea that Bitcoin's value is influenced by energy used by the network, the mining efficiency, and the rate that coins are created. When more miners join, the hash rate or total computing power increases, meaning more energy is securing the network. Some models suggest that growing energy investment strengthens Bitcoin's fundamental value. In reality, most believe Bitcoin's price is driven by several forces, including mining costs, supply cycles like halvings, investor demand, and macroeconomic conditions. It's in this world, so obviously. Energy value is just one model used to explain Bitcoin's long-term valuation. The only other thing I would say about that, about Bitcoin in itself, and I think you guys would probably agree with this, do you feel that timing was everything? That it needed 2008 to happen? If it was in 1997, would we have had the computing power? Would we have had the accessibility? Would we have had the infrastructure at play? I think the answer is no. So I think 2008 needed to happen in order for this to get off the ground.
Well, and then you also have with every problem, there's a solution, right? So like, would the narrative have even taken off if there wasn't a huge problem? That's kind of where I see 2008 coming into play as well. That's how, what do you think, Bully?
I think something like this was inevitable. I think 2008 was probably just a catalyst for it. I don't think it was essentially kind of the origin story for it. Something like this was bound to happen. I mean, you take a look at the last 1,000 years, it's always been centralized authorities who are at the head of any type of traditional financial infrastructure. I think that it was just only a matter of time as we stepped into this digital age that something like this would have been introduced.
Yeah. And so, go ahead.
No, go, please.
And so I sent caveman a picture of The Economist. It was in 1988 that that was written, and it talked about a digital currency. So tell me it wasn't on the minds of everybody. But I have like a ton written on Satoshi. So I don't know if you want to continue on him a little bit, or if you, Bully, do you want to say anything about Satoshi?
No, I don't want to say much about Satoshi, but before we do jump into the next phase, I do want to talk to you guys a little bit about the way that it is structured, but please walk us through your research.
I mean, see, my anxiety comes from I have so much written that I'm like, how much is too much? You know what I'm saying? Like, seriously. So I guess some of the things that I guess should we touch on who people think or are speculating who Satoshi is, or do you just want to leave that alone? Do you want to touch on the 1 to 1.1 million Bitcoin that he has that hasn't, the wallets haven't moved?
I think you're doing it right now.
Freestyle.
Okay, so yeah. Bullet point style. See, I like, my problem is I write too much and then I like don't even say it, and I do bullet style and I'm like, I missed so much there. But so do you want to talk about the suspects of him, or
Do it. Let's hear it.
okay. So
A little bit.
yeah, so there's like three that kind of people throw out. Well, there's more than three. So there's three, and then you have like NASA and other government agencies. There's the globalist honeypot story. So the three that people think or say it could be is Hal Finley, because that was the first person to run Bitcoin besides Satoshi. And the receipts of the first Bitcoin transaction, he created a reusable proof of work and was deeply embedded in the cyberpunk scene. And then, I mean, I'm not convinced that it's not David, but you know, Swartz is a pretty smart guy. And then Nick Szabo is the second one, and then Adam Back. He invented the hash cash, the proof of work mechanism. So NASA are a three-letter agency. The argument goes only a state-level actor would have the resources to foresee and build a system so robust and global. So then, I don't know if you touched on this too, but Satoshi was originally out of Japan, but writings and things that he did send out, people have analyzed and said that it's more from the UK and the Americas. Mm-hmm. So they don't think that that was his origin. Yeah. So my personal theory on who it is it isn't a single person, but a small group of like cyberpunks, a collective, pooled, skilled people in the cryptography, coding, and economist world. So yeah,
there is irony there, because the cyberpunk movement was what helped propel Bitcoin at the beginning, and now it's ETFs in Wall Street.
Yeah, definitely.
Right.
Yeah. So in touching on the digital gold theory, so people who say that it's digital gold, they're wishing for something bad upon Bitcoin, because if it is a digital gold, it is going to be a lot less volatile and it's going to be a lot more boring, if that makes sense. What they love about Bitcoin would go away. I guess I'll save that for the end, but I think more of it as a store of value. That's how I see Bitcoin. It's not utility driven, but yeah.
Can I ask you guys a question, as we're still kind of stuck up on the team and the way that it is structured? Because this is unlike any other financial infrastructure system that we've seen before. There is no central organization behind it. There's no CEO, there's no leadership team, no headquarters, no governing body that's responsible for the decisions. It's completely decentralized for users out there. In my research, when I'm looking at the Bank of International Settlements, the International Monetary Funds, they typically tend to build financial infrastructure around systems that have clear set of governance and accountability. Do you guys think that because of how decentralized it is, that it could make it harder for institutions to treat it as a managed financial infrastructure because of the lack of that organization, that governance body?
No. No,
I
and I'll talk about later.
I agree, and I will probably touch on that later too. But I disagree with some of that. I think regulation, when we get to that point, I have a lot to say about. I have a lot to say about everything, but I'm doing my best not to. But yeah, I think we're going to see some things.
Yeah. It's yeah. So it's funny. I was on a live. I know I'm going to go a bit of a tangent here. I was on a live many months ago, and there was someone who's very intelligent in the space, and he goes, "Bitcoin at the beginning was just a meme coin," and I looked at him like, "What? What did you say?" And he goes, "It was a meme coin. It was a meme coin that people wanted to rally with, and it gave it value, and then it sort of self perpetuated to where it is now." And I thought about the concept of what he was talking about. I was like, okay, and it's in its infancy. He's not wrong. Like, we give things value because we decide collectively that it's going to be valuable.
Right.
So in the essence of what you were talking about, Bully, if you can still hear me, I understand what you're saying, but the fact that we have gotten past that it now has inherent value and use case. I think now that that has been established, it will continue and backed up. I think it will continue to be one of the pillars of fintech. So
Silver Stack, I have looked that up, and how it's money, but yeah. I agree very much, Caveman. But I think that's like that with every single crypto in the space. The very beginning phases, you need to have a meme-like structure. You need to have a community. You need to have a backing. You need to get it off the ground. So in essence, I do agree. I do agree at this point. This is going to sound probably wrong. I agree with that with XRP. Like there's a whole and Bitcoin, you have a Bitcoin maxis, you have XRP army, you have all these people behind it who are literally holding it up to some extent until utility kicks in and these assets are doing what they're supposed to do, which I feel Bitcoin already has. So that one doesn't really count anymore, but you kind of have a meme structure in a sense, but not in a way of like rug pulls and all of that stuff. It's structured a little differently, I think.
For me, the Bitcoin talk conversation about it not having or me being a meme kind of ended in 2010. 2010, there was the first Bitcoin faucet. A developer named Gavin Andreessen created something called the Bitcoin faucet. It literally gave away free Bitcoin. The idea was to get it distributed, which would then give it potential use case. And he did this by, I'll touch on it later, but it did this by like literally you go to a website, you fill out a CAPTCHA, they send you 5 Bitcoin. And then from that, the idea was the network needed users, transactions, wallets, and community growth. That is how Bitcoin started to now become more distributed. And then from there had use cases. By the way, the faucet gave out 19,700 Bitcoins at the beginning, in case anyone was caring. Where were you guys in 2010?
I was playing Call of Duty.
Instead of solving CAPTCHAs. Okay, so do you want to go back to what you were talking about, or do you want to go on to tokenomics?
It's totally up to you guys. So I think I probably want to split utility from tokenomics, if that's okay. Because like I said, I'm a little long-winded, so I want to break that up if that's okay with you. And then we can kind of,
Go ahead.
You want me to get into the tokenomics of it all? Okay, let's do it. So Bitcoin's protocol and tokenomics are basically monetary money or monetary policy written into code instead of managed by a committee. At the core, it's a fixed supply. There will never be more than 21 million Bitcoin. The cap isn't a promise from a politician. It's enforced by rules every full node runs. New coins only come into existence through the block's subsidy when miners find a valid block. They're allowed to mint a certain number of new Bitcoin to themselves. That subsidy started at 50 Bitcoin per block, and it gets cut in half every 210,000 blocks, which works out to be roughly once every 4 years. We've gone from 50 to 25 to 1250 to 6.25, and now we're at 3.25 Bitcoin per block after the last halving. The network targets a new block roughly every 10 minutes, and if the blocks are being found faster or slower, then the protocol automatically adjusts mining deficiencies every 2016 blocks about every 2 weeks to bring that average back towards the 10-minute target. The schedule is completely transparent and predictable. Anyone can look decades into the future and know exactly how many Bitcoin will be issued at any point in time. Because the issuance schedule is known in advance and declines over time, Bitcoin's supply curve is basically perfectly and realistic in the short term. No matter how high the demand rises, new supplies cannot suddenly increase. Too much? Good. Keep going.
Love it.
Okay. So mining is where the incentive and scarcity come together. Miners run proof of work, burning electricity and hardware cycles to try to find a block header that meets the current deficiency target. Every 2016 blocks, the network automatically adjusts that difficulty, so blocks keep arriving at roughly the same pace, regardless of how many computer power joins or leaves. When a miner succeeds, they collect the block rewards, which has two parts: the subsidy, newly minted Bitcoin, and the transaction fee that users attach to their transactions to get included. Early on, almost all miner revenue came from subsidy. Fees were negotiable, but over time, as having kept cutting subsidy, the plan is that the fees gradually take over as the main component of the miner income. So in practice, the miners are effectively running a simple business equation. Does the value of the block reward subsidy plus the fees exceed their electricity costs, hardware depreciation, and some profit margin? If it does, they stay online. And if it doesn't, the least efficient miner shuts off, hash rates drop, and difficulty adjusts down, and more efficient miners regain profitability. So that leads straight into Bitcoin's scarcity budget. The scarcity budget is just how much the network is paying miners. It aggregates to make attacking the chain economically unattractive. Every halving cuts the subsidy, which means the scarcity budget depends more on how two things: the price of Bitcoin and the strength of the fee market. If the price keeps raising over a long term, the same 3.125 Bitcoin per block can still represent a lot of value. If the block space stays scarce and valuable, users will bid up fees when they really need inclusion. Subsidy, but let's go down to this one.
Mind if I just interject?
Huh?
Mind if I interject for a second?
Yes, of course.
So I would just say, guys, that obviously she just talked about 21 million coins. That's it. That's all, right? We know that there's a halving, and that halving is why the halving of like starting off at 50 Bitcoin is what brought the 21 million. It wasn't just like 21 million out of the air. And there's a lot of misinformation in this space, like quite a bit actually, to be honest. And one of the things I see a lot of, I'm not sure if you guys feel that too, is you hear people talking about Bitcoin and who owns it. It's China, it's the banks, And I wanted to reference that, if that's okay with you guys. So here's the breakdown of who owns Bitcoin. Of the 21 that's potentially available, which not yet, obviously, there's 19.6 million in BTC in circulation. 13.8, which represents 65.9%, is owned by individuals. What is individuals? Great question. So, of the 65.9 that is owned by retail, self-custody wallets is 40 to 43%. On exchanges, there's 17 to 20%. ETFs, yes, ETFs are 3 to 4%, and 2 to 3% is derivatives and broker exposure. So that is who owns. So yes, the bulk is individuals, but all that individuals, you have to break it down. ETFs, other investment funds or financial institutions, is like 7.8%. Corporate balance sheet is 6.2%. Governments only is 1.5 right now, at the time of this information at least. Lost coins is 7.5%. So think of it back to like 2008, 9, 10, right? You could fit the entire freaking network on a like thumb drive. That's where people were at. So 1.57 million Bitcoins gone. They're lost, maybe indefinitely. Early miners get 4 to 5% of the shares, and then DeFi contracts and other things are 1 to 2%. So that's kind of who owns Bitcoin right now. Major institutional funds, BlackRock. I mean, when the ETFs came out for BlackRock for Bitcoin, we'll get there, but things just exploded for Bitcoin. BlackRock, Fidelity, Grayscale, ARC21 shares, and Bitwise combined total is, I'm not going to do the math right now because I can't really math it, but it's a lot. 1.25 million Bitcoin, give or take. Yeah, keep going.
No, you're good. So, and that, I mean, we can end there, I think. I mean, I just really talked more about the mining, the 21 million, which you
Mining's
touched
part of it
on.
for security.
Huh?
Mining is a huge part of the security of Bitcoin.
Yeah. Yeah.
Massive. So, Bully, anything?
In terms of the tokenomics, no. I think it is. I just think it's a strong suit. It's one of its biggest strong suits. Which is a great thing.
I have a couple things, but Bully, do you want to continue with what you were talking about?
What was I talking about?
Okay. I'm not sure. Why? Okay, so I'll talk about why critics think it's dangerous. Some economists believe a fixed supply could cause problems, like deflation. If the economy grows but money supply stays fixed, each coin becomes more valuable. People may hoard money instead of spending it. That could slow the economic activity. No emergency of flexibility. During crises, central banks inject liquidity. Examples include what we just went 2008, which we talked about, and then obviously C19 stimulus programs. Bitcoin can't do that. Its rules are rigid, locked in. And the third thing is wealth concentration. Early adopters mined or bought Bitcoin extremely cheaply. A large portion of supply is concentrated among early holders. Critics argue this could create extreme wealth inequality. And then obviously like early adoption, number one, we all know about pizza, the pizza that was bought. That was 10,000 Bitcoin for 2 pizzas. But at the time, it had no real market price. It was it was a fraction of a penny.
And it had to happen. It was really them just proving that it could happen. It wasn't, they were just like, look, we did it. Here's our pizza,
So Lazos is quoted saying, "I'll pay 10,000 Bitcoin for a couple pizzas," and he bought it from Papa John's. Today, that 10,000 obviously is 670 million, as we all know. But what it proved back then, which was super important, is that Bitcoin actually there was no crypto, right? Like no one No one had crypto on their mind. There wasn't us talking about crypto. Can we use it for real world use case? The answer was proven on in 2000, May 22nd, 2010, by a guy named Lazarus. So he says he didn't regret it. He doesn't regret the transaction. He proved that it had real world usage. But again, guys, 2010, nobody knew what Bitcoin was worth. There were no trading platforms. There were no order books. There were no buyers or sellers. So the first known Bitcoin price calculation came from an early community member named Marty Malney. Great name. He helped estimate Bitcoin's value based on mining electricity costs. And on October 12th, 2009, he conducted the first recorded Bitcoin to USD transaction. He sold 5,050 Bitcoin via PayPal for $5.02, which meant that it was worth like 1/10 of a cent for Bitcoin back then. And you guys already talked about why electricity is used to price Bitcoin. Back to what we were talking about earlier with solving the mathematical puzzles, which creates the proof of work and the hardware necessary to do that. This is what creates the digital scarcity, just once again to hammer that home. Bully, we will.
I'm good.
You want to go? You want to go to year by year breakdown?
Yeah, is that? Do you wanna do it, or you want me to do it? I mean,
Go ahead, brother.
I'm definitely not as detailed as you. I know you have 53 pages over there. Yeah. So
61.
2008 was the white paper.
You beat me.
Huh?
He beat me. He's got 63. Sorry, Billy.
How many do you have?
I only had 53.
Keep going. Keep going. Long off track.
2008 was the white paper. 2009 network launch. That was your, as Caveman said earlier, your Genesis block. 2010, I guess, was your first real transaction. Laszlo, you said 10,000 Bitcoin for 2 pizzas. 2011 to 2013 was probably started the start of your early adoption. I would say that that's probably when you started to see it appearing on your exchanges and people were actually able to jump in and start to participate in it. I would say development during that time was improved, right? You had software continuing to be installed. The community was small at the time, but it was continuing to grow. People were mining, people were trading. They were kind of experimenting with the Bitcoin network. And I would say probably around 2012 is when the development was kind of really being focused on. It was, of course, it was all community driven, but this is where I guess Bitcoin was probably starting to become known on the dark web, right? Silk Road. Maybe if you did hear about it at the time, that's probably where you had your skepticism of it, or there was negative media coverage. 2017, the block size debate. That was probably one of the biggest disagreements with the community of how Bitcoin should scale. If I'm correct, I believe that some developers wanted to increase the block sizes. So I think that caused a pretty big debate with that. And then it eventually just resulted in a network split, right? So there was a creation of your cryptocurrency. That's where your Bitcoin Cash came in. And the Bitcoin network, they continue to operate with much smaller blocks. 2021 was when we started to get our real big institutional interest with this. You had huge companies, financial institutions. They started to add Bitcoin into their balance sheets, and they were also even offering your Bitcoin financial products, right? Your ETFs, your ETPs. MicroStrategy started to buy huge amounts of Bitcoin as a treasury reserve asset, and maybe this is where people started to perceive Bitcoin in a better light. Instead of viewing it as that payment system, Investors started to finally view it around this time as your store of value, your digital asset, similar to gold. 2024, Bitcoin ETFs. That's where our ETFs come in. And that was huge, right? We got approved for the spot Bitcoin ETFs. BlackRock, Fidelity, they all launched Bitcoin ETFs that allowed their investors to gain exposure to Bitcoin. And that had a cascading effect, I believe. I think that was probably one of the reasons why this cycle probably responded a little bit different than the previous ones. Inflows coming in, pulling circulation out. I don't know where else to go from there.
Okay, you touched almost everything, but there are some things that we need to talk about, because I think that there are, guys, like, how do I explain this? When a first to market goes through the lumps and bruises that are needed in order to come out on the other side to be the industry standard and the leader, there are many things that has happened to Bitcoin that I want to touch on. Otherwise, I wouldn't say it. Like if this was like, anyways, if this was another project, I wouldn't say anything. But because it's Bitcoin, I really want to like rewind a little bit to say some things that you didn't. If I'm sorry, I just have to. The first thing I would say is so 2010, the 184 billion Bitcoin bug happened. Essentially one of the strangest moments in history for Bitcoin on August 15th. Someone created 184 billions in a single transaction, 9,000 times more than 21 million. The flaw in the Bitcoin software allowed transaction to overflow the value field in a single block. It was block 74638, doesn't matter. But why this was a huge problem and why it matters is because Bitcoin's main promise is there's never going to be more than 21 million. If unlimited coins could be created, the entire system, it would lose credibility. At the time, the bug threatened more monetary rule of Bitcoin. Fixed right away. The bug quickly noticed by developers, and within hours, the bug was identified. A patch version of software was released, and the network rolled back to the blockchain to before the bad transaction could. Miners upgraded the software, and the invalid block was removed. A notch in what needs to happen for a blockchain to continue to be credible and be successful. Obviously, it's important. Stricter transaction checks are added. The code was hardened. Developer review improved. The only time Bitcoin was rewritten, because the bad block was removed, the event required a temporary chain rollback, extremely rare. Today, with thousands of nodes, massive hash power, coordinating a rollback like that, it would be nearly impossible. Lessons learned on that front. In July 2010, major thing crazy happened. Mt. Gox was created by a programmer named Jed McCabe. People might know him. I'm watching. Thanks, Lionel. They allowed users to buy and sell Bitcoin easily. This was literally the at one point, I think it was 70% of all Bitcoin transactions worldwide were handled by Mt. Gox. Massive implementation for the use case and the distribution of Bitcoin. 2011, Bitcoin explodes. It gets to $1 for the first time. I know this sounds like nothing to you guys, but when you have something coming from nothing, with fraction of a cent, and then going to $1, can you imagine what that would look like if you were invested early? But in 2011, it goes from $1 and then hits $31 at the height of 2011. Mt. Gox suffered its first security breach and then crashed back to a penny. There were other things that happened, like there was a creation of Bitstamp, BTC, whatever. In 2011, Satoshi Nakamoto disappeared. Gone. Absolutely off the market. He sent his final message to developer Gavin Andreessen. And then obviously you talked about Silk Road, so we'll skip past that. In 2012, we love this kind of stuff. We want to see this kind of stuff in utility. At least I do. I know you guys want to see this too. The creation.
That's my little one.
There goes Satoshi. The creation, that was so cute. The creation
She's ready for better, Dad.
That is so adorable.
Here, little feet. Oh, sorry. Go ahead.
No worries. The creation of the Bitcoin Foundation was established in September 2012. The members included Gavin Andreessen and Charlie Shrem. The purpose was to support Bitcoin development, promote adoption, and improve public understanding at a time when none of this existed. In fact, headwinds were coming, and they were coming quickly. The first Bitcoin halving you already talked about, which was fantastic. In 2013, though, the bandwagon started. Media started kicking in. Cyprus government proposed bank deposit levies. Investors began seeking alternative assets from the banking system. So this is the beginning of like, wait a second, we don't control our money. We need to find a different way. What's this Bitcoin? That's the mindset of the people back then, right? And then Bitcoin adoption spiked in Europe. Media highlighted.
That was 2013, you said?
Correct.
Okay. Go ahead. Keep going.
Media highlighted Bitcoin as a safe haven. And after hitting $260 in 2013, it dropped to $50. We don't normally talk about prices, but I think it's important that we measure the success of Bitcoin because, again, this is the beginning. This is the infancy. This is where it came from. And we get to see the journey on a financial level, I guess, so to speak, because it is an investment, right? November, December 2013. So what we had... So there was two bull runs in 2013. In November, it hit $1,100 on Mt. Gox. Rising Chinese demand, speculation on global adoption. The governments, now what happened is at $1,100, Bitcoin says, governments say, wait a second here. What the hell is going on? Well, wait, what is this thing? Like, we don't have any control on this. Are we taking taxes? Do we know if it's money laundering? Do we know, is it being used for notorious things? U.S. FinCEN issued guidance on Bitcoin and virtual currencies. Chinese central bank issued warnings, and the European regulators began examining Bitcoin. 2014, absolute crisis. Mt. Gox collapses, as most of us know. The U.S. FinCEN clarified Bitcoin regulations for money transmitters, and European regulators started AML and KYC guidelines. China banned financial institutions from handling Bitcoin. So we go from $1,100, people talking about it everywhere, to now 2014, and it's like, no. Whoa, what's going on? But Coinbase, Kraken, they started expanding naturally. And then Silk Road gets shut down. The guy is arrested, and Bitcoin continued to be the primary currency for darknet transactions. See, I don't think any one of us would say yay for Silk Road. But what Silk Road offered was it gave a lot of real use case for Bitcoin and actual adoption and use. So it then lost that. So when Silk Road went away, Bitcoin's now that was our golden goose. At the same time, mining became fully industrialized, dominated by ASIC miners. 2015 was about the rebuild. Coinbase began expanding beyond the US into European markets, increasing legitimacy for Bitcoin throughout the globe. Early merchant adoption like Overstock.com and Newegg, BitPay and Coinbase Commerce helped merchants process Bitcoin. I don't know if I think it'd be the equivalent for me to say to you right now that the other coins that we all know and trust and love are going to be used on a day-to-day basis. That's where they were in 2015. They were saying, no. Merchants or Coinbase is actually helping us get merchants to use it, to have it transfer back and forth. Now, FinCEN in the US clarified rules for money transmitter licenses in New York and California, which started to put constraints on it even more, and European regulators issued guidance on anti-money laundering. Again, this is all a control mechanism. Strengthened legal framework for Bitcoin and companies started to happen. In 2016, it was a pivotal year. Block reward reduction went from 25 BTC to 12.5, which obviously cut by 50%, which helped increase the scarcity, like it helped reinforce the scarcity model. And then Binance launched, right? Obviously, we all know Binance. Obviously, we know how much money came into the system because of that. Coinbase, Bitstamp, and Kraken continue to expand, and liquidity on fiat on-ramps improve, making Bitcoin more accessible. The bullish trend accelerated in Q4, largely due to the anticipation of the halving. It went from 430 to 960, so basically more than doubled. In 2017, it went bonkers, mainstream. Bitcoin was freaking everywhere. If you weren't talking of Bitcoin, you were in the cave with me. It gained a 20x in 12 months to 19,700. Bitcoin forks happened and the secret debate started to happen. What that basically was, guys, to make it really simple for you, segregated witness, it was proposed to increase block capacity. The community disagreement led to the coin we all know, Bitcoin Hash. It had a hard fork. That means that Bitcoin, the Bitcoin network, then just hard forked and created its own entity, Bitcoin Cash, in August. Retail frenzy was crazy. Institutional experiments were happening. Payment adoption there was over 100,000 merchants. Can you imagine a coin that was a fraction of a penny now has 100,000 merchants worldwide? That's where we were in 2017. Bitcoin became a household name covered by CNBC, Forbes, NYT. Early mainstream adoptions were driven by speculation, but people were flooding in. Google and Facebook banned crypto ads. The FUD was starting to come down the line. Binance launched in July, and China banned ICOs and domestic exchanges. South Korea and Japan implemented stricter rules. Then 2018, bear market. It went from like 13.8 to 3,800. 72% of the 2017 highs gone. The SEC issued warnings on ICOs again. China reinforced its policies. Japan strengthened crypto exchange licensing. European began drafting AML and KYC requirements. But Coinbase raised $100 million, trying to become the leader for retail institutional investors vis-a-vis Bitcoin. Bakkt and other institutional custody platforms were being planned. Obviously, SegWit adoption was starting to happen. The Lightning Network began live testing on Bitcoin in 2018. And then the Bitcoin mainnet focus shifted towards scalability and off-chain solutions and network security. 2019, Bakkt, which is the ICE-backed crypto platform, announced its plan for Bitcoin futures and custody platform, and then launched in 2019. Major companies like started to come on to blockchain for Bitcoin. Microsoft, IBM, NASDAQ started piloting projects. Coinbase and Gemini expanded services for institutional investors. Mining pools such as Foundry USA, F2 Pool, Ant Pool, Slush Pool continued consolidating global mining powers. So they started to become their own global powers. Lightning Network saw early adoption. And the one thing that I didn't know, just a shout out to Canada, Canada played a real big part in the early mining of Bitcoin. Obviously, China, USA, Japan, Europe, Kazakhstan was a big one as well. In 2020, we know the macro effects. Bully talked about it. It wasn't great. We can skip that. ETFs were absolutely crucial to the liquidity coming on market. And then we saw what happened with, we saw what happened initially with the speculation of ETFs. Then it went down, but then by the end of it, things were good. 2021, history is made, full mainstream, regulatory focus, corporate participation, media coverage. We go from 29K to 69K. MicroStrategy comes in, Tesla comes in, Square, Block, Galaxy Digital came in for treasuries. Global macroeconomic stimulus, Bitcoin seen as an inflation hedge, which back to that whole gold, digital gold.
Commodities, yeah.
Correct. Increasing retail adoption with Coinbase and Binance. And then the ETFs just absolutely stormed on. In 2022, crypto winter, things weren't great. Things went down. We went from 46 to 16. Now, there were a couple things that happened, right? We had Terra Luna collapse. So these are all things. So like Bitcoin is an investment. Investments are always going to get influenced by multiple things, including macro events that we are out of our control. Terra Luna was a horrible thing that happened. 3 Hours Capital bankrupt. Celsius Network and Voyager Digital bankruptcies. And then European began implementing MiCA. All things that kept pushing Bitcoin down and down and down. In 2023, it starts to stabilize. ETFs adoption even more globally. MiCA regulations for crypto assets happen to come into place. And then 2024 is an absolute key year for Bitcoin. The fourth Bitcoin halving, the block obviously went from 6.25 to 3.125. The event reduced the rate of Bitcoin entering circulation, as we all know what happens. And then more liquidity came rushing into the marketplace. Multiple spot Bitcoin ETFs. There's, like I said earlier, 1.12 million BTC acquired by ETFs. And why that matters, guys, if we aren't all on the same page, ETFs make it easier for institutional and retail investors to access Bitcoin through normal brokerage accounts that they're already part of, rather than direct custody, which the normies just don't do. Major driver of demand and price support throughout the year. 2025, we all lived it. We all know what happened. All-time highs, 125,400. It broke through some mental things. So like that $100,000 mark, which is like a mental, can we get through this? And it did, which is an important milestone, by the way. U.S. Strategic Bitcoin Reserve. In March 2025, the U.S. government announced under an executive order a strategic Bitcoin reserve. Announced. Let's implement it now, but announced. Using seized BTC as part of national asset stockpile. This move aimed to position Bitcoin as a sovereign hedge asset and potentially reduce circulating supply pressure, contributing to a bullish narrative. In addition to that, Texas passed legislation to create its own Bitcoin reserve and began acquisitions using a spot Bitcoin ETF. Firms continued allocating Bitcoin, some like MicroStrategy, obviously we know what he's up to, again, to reinforce institutional demand. 2026, I'm just going to say geopolitics and conflicts, ETF flows and institutional demand is something you should probably look for. US regulatory and clarity is something you should probably look for. Macro signals for inflation is something you should look for. Technical support and resistance zones. I don't do it, but you guys probably want to look at that as well. And there it is. There is the nuts and bolts, the meat and potatoes of the journey that Bitcoin took. Do you guys have anything to add?
Chat, throw a 1 for that outstanding 50-something page research.
No, that was
year
only
by
3.
year. He's going through it. I think it's important that I stop us at this partnership integration part before we jump into the next one, and I think we have to discuss this. Bitcoin is starting to look different when we compare it to other projects that we have covered in Utility Unlocked. And when we typically review these utility projects, we spend a lot of time looking at things like partnerships, real-world usage, integrations, enterprise adoption. But with Bitcoin, that conversation, caveman, it does not look the same. So before I kind of walk through that aspect of it, I want to know if you guys agree with the definition of utility that I usually work with. Because if we don't have a consensus agreement of it, then obviously we're going to view this at two different things. Yes or no, would you guys agree that utility is the consistent use of something because it performs a function that solves a real-world problem?
Agreed.
Okay. So if that is the case, then integration, right? When we talk about real infrastructure adoption, there's usually clear signs that a technology is being integrated into a real system, right? That is what utility is. It's involved because it solves a functionality that solves a real world problem. So, for example, if the banks were integrating a digital asset into the financial infrastructure, then we would typically see things like treasury options running through that particular network, not some payment supplier through that particular network. Suppliers actually utilizing the asset. Maybe it's cross-border settlements happening on that transactional rails. In other words, it's the asset is becoming part of how the system actually operates. And I welcome for you guys to challenge me on this, but what I actually see with Bitcoin, that picture looks very different, right? Banks today are not having, they're not settling interbank obligations on the Bitcoin network. They're not using Bitcoin for corresponding banking. They're not using Bitcoin for RTGS payments. Enterprises are, they're not widely integrating Bitcoin into their actual workflows. But what we are seeing with Bitcoin is a small number of companies that are holding Bitcoin as a treasury asset. Payment processors converting Bitcoin back to fiat immediately as soon as they accept that payment. Investors, institutions jumping into the asset for price exposure. And I think that it's important to understand something. Holding Bitcoin on a balance sheet, it's not the same as integrating Bitcoin into business operations. Even Stripe or some of the other payment processors that do accept this asset, when it's not happening on it's not happening on Bitcoin's transactional rails. Two very separate things are happening, right? It's the intent from what is actually happening. Bitcoin's white paper, peer-to-peer electronic cash system. That is the intent. But that intent is not creating the utility. I'm not saying that there isn't any utility. So what is Bitcoin actually being used for today?
Do you want me to answer, or do you want to answer, Eva?
So for me, I totally hear what you're saying, and I agree with what you're saying from a fundamental, micro lens of this is the white paper, this is what it was designed for, this is what it was supposed to be used for, and it's diverted from that use case, so therefore it has no utility. But I will say, and I would have agreed with you prior to this breakdown. But what I feel, where I feel Bitcoin shines is, I wrote a little blurb on it. Actually, it was part of the utility part. It sacrifices speed and programmability for scarcity, decentralization, and monetary hardness. It may never be the fast payment network or most flexible smart contract platform, but where it dominates is the trust minimize, neutral, long-term value storage and settlement, longest uptime, most nodes, deepest liquidity, strongest brand and non-sovereign money, and other chains can specialize in payments, DeFi, and high TPS. Bitcoin's job might be the bedrock for digital assets and the base layer for global value. So I hear what you're saying, but I feel, yeah, I can see Caveman chomping at the bits. Go with it, Caveman, go. He's
Guys,
a hot horse ready to go.
how does the number 141 billion sound to you? Sound good?
141 billion. What's that number?
That's how much indirectly Bitcoin has saved the US government. Let me talk about it. Real world adoption, Bitcoin versus treasuries as a store of value. US treasuries considered risk-free assets backed by the US government, the government that you guys all are under. Low volatility, low return, Tether and Bitcoin interaction. Exchanges often use USDT as a proxy for USD, which is actually backed by treasuries. Traders use USDT to buy and sell Bitcoin without touching real dollars. In practice, investors convert USD to USDT. USDT is used to buy Bitcoin. USDT issuers hold USD or treasury bills to back it. More Bitcoin you buy, the more USDT is used, which is backed by treasuries. Direct US Treasury holdings is 122 billion, and in the bills and bonds, and the total, including reverse repo, is 140 to 141 billion. That is your real world use case to the degree that is absolutely undeniable, not to speak of what she talked about and what you talked about.
We're really not going to assume that something, because there is monetary value, is classified as utility. Would you declare the same across gold?
That it has utility?
Are you going to say that gold is a utility asset?
I say that the second that a gold or Bitcoin can save the American government from absolutely losing its value, its footing, that is actual utility.
So the potential for something, not how it's actually behaving today, is potential.
No, it's not potential. It is.
So, but wait a second. Gold is a utility.
I understand it's utility, but the behavior for it, we don't classify it as a utility asset. We classify it as a store of value. When you're looking at how the institutions are adopting Bitcoin, the way that they are usually coming in is your ETFs, your custody services, your derivatives, your balance sheet exposures. That's the behavior around it. But treating it as a store of value is not the same as depending on it for infrastructure. It's not going through. And where is the transactional rails? Where is the actual utility? I don't care about the potential that it could do, but where is it today being utilized by payment processors transacting on the rail? I can't sit there and say just because something has monetary value, it has utility. That's not enough for me.
Without a government. Okay, so I know when Glenn comes up earlier next, he's going to talk about the Lightning Network and how I understand all that. But I'm not even going there. I'm going with just at its root level. If it is literally supporting your entire system, your government, which therefore your economy, then it has value based only on that. Not value, but utility.
And what was the number of governments participating in this? Was it 1%? That was
I'm only referring to the number one economy in the world.
What was it?
Maybe I should just go into this. So the savings and inflationary economics for Bitcoin. So that's just because this is Bitcoin's strongest grassroots use case. It's a use case. Mm-hmm. So in countries where inflation is eating 20 to 50 or even 200% a year, think Argentina, Venezuela, Nigeria, Lebanon, people use Bitcoin as a permissionless savings account. You can't print more of it. A government can't freeze it. And you can't hold on to it like a phone without needing a bank account. So it's volatile as hell in short term. There's no question about that. But for a lot of people, the choice is between Bitcoin's price swings and guaranteed debasement of their local currency. So where other assets position better. So there are other assets that do position better than Bitcoin in this case, and that's stablecoins, USDT, USDC, but gold-backed tokens, let's see. So then there's the Lightning Network and the micropayments. This is utility. And this is the base Bitcoin chain. It's slow, it's expensive, but that's on purpose because it prioritizes scarcity and decentralization over throughput. So it's more like digital gold settlement than a retail layer payment. So again, back to the digital gold. So the Lightning Network is Bitcoin's layer 2 solution. It's a separate network built on top of Bitcoin that lets you open payment channels between users. You can lock up some Bitcoin in a shared multi-sig address on the main chain with transaction and then send unlimited, instant, near free payment back and forth inside the channel by just updating the balance. When you're done, one final transaction closes the channel and settles the net result on Bitcoin. If you don't have a direct channel with someone, then the network routes the payment through other channels like internet hoops. It's a private, fast subsect, cheap fractions of a cent, and still inherits Bitcoin's scarcity. So I did go through and I did do all of the, okay. So I did go through and I did list all of Bitcoin's abilities to do certain jobs. And so I'll quickly just tell you what they are. I'm not going to explain what they are, but the beginning of this, I did say to keep 3 things in mind. Like ask yourself 3 questions when you hear these use cases. So what can Bitcoin theoretically handle? Where might other networks be better suited and why and what are they? And where does Bitcoin really shine when you look at the real world adoption? So the first thing that it theoretically can do is cross-border payments and remittance. It can do that. But as we know, there are better suited solutions and more integrated solutions to those problems. And that is XRP, Stellar, and stablecoins. So then theoretically, it can do savings and inflationary. Stablecoins also rally that. Gold-backed tokens that are pegged to Tether and gold, they rally that. And so I feel like those are better use cases. It can theoretically do those, but there's other things integrated that will probably do them better. Bully, you seem like you want to say something.
We can't sit here and base this show off of theoreticals. We can't. You look at WLFI we did last week, potential for RWAs, possibly, but we can't sit there and say that that's the utility for it. I can't sit here and say that because something is a store of value that has utility, or because it has the ability to exchange something qualifies as utility. Now, I understand when you're outside of the U.S. and you have a chokehold on currency, then maybe you want to participate that as a means to participate in the market, but it's no different than your cigarettes in prison. If we're gonna participate in that sort of economy because something has monetary value and I could trade A for B for it, and that's utility, I think that's a weak functional utility asset.
So let's talk about what utility is, and let's talk about money. Okay, so money is just the exchange of goods and services, an agreed upon amount, right? So by definition of that, anything, you're right. If you in prison, you can't go to the bank. So therefore, things like cigarettes become a commodity that is scarce and therefore easy to exchange goods and services, whatever the hell it is you want. But with regards to Bitcoin, would you not agree that prior to Bitcoin, prior to its essence, that we, the people, trusted banks? That's all we had. We had banks, we had financial institutions to tell us what we should do. We had to trust that they had our best interest. We had no other option. Would you agree with that?
Yes.
So one second, hold on.
Go ahead.
Glenn just said in the chat, no, he was under the impression that there was going to be no bias here, and if he was led here under false pretense, his whole presentation is going to change. I just want to clarify, I have no bias either way.
No.
Just talking fact based. Yeah.
No. So
No.
absolutely not, Glenn. There is absolutely no bias. In fact, I'm literally talking about what I think it is. I would say that Bitcoin changed that with software and math. That the trust that they took away from financial institutions became a math problem and a software problem. And that is its actual utility, that you can now trade goods and services based on math and software. Would you not agree with that?
I agree with that, but that's the
there
theoretical utility. We have to examine the asset for how it is behaving today. That is the research we have to present to these people. We have to analyze how this utility project is behaving today.
Right. And right now it's backing $144 billion in short-term bonds. That's its utility.
Yes.
On top of many other things.
But holding an asset is not the same as needing to use it.
You are using it. That's my point.
You're using it as an investment vehicle.
No. If you're buying a bond, technically yes, but if you're buying bonds, are you not investing in your government? In the promise of actually having a economy flourish and then potentially get a return on those bonds? That's why you buy bonds. No?
I would agree. I wouldn't consider a bond a utility asset. No way then I would view the Federal Reserve as infrastructure for supplying us with debt to fund our infrastructure.
So if the bond market goes to shit, what happens? We know we're seeing it, but go ahead.
If bonds tank, then the United States debt collapses with that. Bonds is essentially what's pulling us out of debt.
Correct.
We're selling debt to people.
So if your bond market goes to shit, your economy goes to shit. You literally are worthless. You become Czechoslovakia.
Okay, hold on. So as far as cross-border and remittance, it's not theoretical because it is actual utility. So Bitcoin as a rail model, it's being used. Most modern Bitcoin-based remittance apps like Strike use methods called send globally. You send US dollars. So this uses Bitcoin. This is a utility. So the benefit, we won't talk about that. Another real world case in 2026. So you have Strike now operates in over 95 countries, including major corridors like the US, Nigeria, Guatemala, Kenya, the Philippines, and Vietnam. Then you have BitNob in Africa that uses Bitcoin to enable instant transfers from apps like Cash App. Then you have El Salvador. El Salvador is the first country to make Bitcoin legal tender. I did a whole report on this. I should have known that. It continues to use the asset for nationally treasured strategies through direct crypto to crypto remittance accounts for less than 1%. Hold on, there's more. Then you have performance and adoption. So in February 2026, Bitcoin's Lightning Network surpassed 1.1 billion in monthly transaction volume, reflecting a massive surge in its use for payments rather than just speculation. That's real utility. Total remittance can take 3 to 5 days and cost up to 6.5% in fees. Bitcoin-based solution can settle in seconds for costs under less than 1%. So that's cross-border payments and remittance utility. So I should have broke it down a little bit more. So in all the cases that I've listed, there are real world use cases for that case, and I should have researched it a little bit more. I apologize. I did a broad thing because, like I said, the information was a lot. But there are lots of use cases for all of the things that I listed. But like with other assets that I do, I put forth other assets that are positioned a little bit better. Like that is their primary role. So it's not that Bitcoin isn't doing them. It's that there's other ones that are designed to do exactly that one niche, if that makes sense. But
Thank you for the explanation. I don't want to die. I don't want to keep going into this. I'd like to move forward. But the one thing that I have found with the research is when you look at these merchants or any type of payments that's interacting around this asset, I don't see it happening. I don't see the Bitcoin being the transactional rails. So if it's still running on the existing financial system, like your ACH, your Visa, your Swift networks, yeah, Bitcoin may be accepted, but if it's converted back to the US dollar and it's transacting on your traditional financial rails, that is more of a payment option than it is the transactional rail itself. I'm sorry we got really deep into this, but I'm focusing more on, is it running on the traditional financial rails and it's the payment option and input, or is it actually running on the Bitcoin rails?
So I would concede this. You're not going to walk around with a brick of gold to pay for groceries. I would concede that. Just like you're not probably going to walk around with a cold storage wallet or whatever your phone or whatever you want to do, and start buying Papa John's pizza. Like that's probably not going to happen, and that's okay. There's not a problem with that. It's not intended for that purpose. If that's what you mean, then I do agree with that statement.
Yeah, I crickets, right? I feel they all have a place and they all have a role, and I do feel Bitcoin has a role. I understand what you're saying, Bully. It's not as utility driven as some of these, in the sense of, what it does. But
Which doesn't
I think
money.
it's just, if anything, I think it demonstrates interoperability more than infrastructure dependency. That's where I'm going with this.
And see, I think it's value, but I'm looking at a much bigger picture too. I think in the moment, and where I think it's a value, and dollars are value. Dollars have utility. Dollars literally run the world. So I feel like, I don't know. I hear what you're saying. That's a tricky one.
Okay. Do you want to say anything else?
Guys, this is what makes the show great, is that we all kind of come together. We really do have an open mind. We challenge each other with it. We just try to come down to the way that we perceive it. And I think that's what makes this show great. I thank my co-host for challenging my perspective as well.
Same, honestly. For me, I just put here, the real question for me is the world is now watching to see, can a completely fixed monetary system support a global economy? Or will economies need flexible money supply? That debate, as you just saw, is still ongoing. However, in April 2011, not even however, I just want to leave it with this. In April 2011, Satoshi sent a final email saying something like, I moved on to other things. After that, there was silence, no posts, no emails, no confirmed communication ever again. And I think that has utility. I really, really do. We did not talk about this at all, not even a little bit. But the fact that, and I started at the beginning of the show with the Satoshi Nakamoto and the fact that he was gone. And when people are like, why do you want to talk about Satoshi Nakamoto? The fact that there is no Satoshi Nakamoto is a good thing. It allows you to have no bias, no one person saying what's good or bad, no control over a government, no person that actually can take they can't be selfish. I forget, how many coins does he have locked up right now?
1.1 million.
There you go.
It's a lot.
So I think that even Satoshi himself has utility for Bitcoin. That is, I don't know if he knew that this was the intended purpose, but it is the result, in my opinion.
I have a whole thesis. I have a whole theory on Bitcoin, and maybe when we end, I will tell you what that is.
What is our next part?
And it's not necessarily not good.
Pardon?
What is our next part? Are we jumping into regulation compliance? Is there something else we should run into before that?
Take it. Do the regulation compliance.
Yeah, I mean, this is just, it's a fundamentally different technology. Most crypto projects that we cover, they have founders, companies behind them, token sales, centralized leadership, as we were discussing before. And when those projects typically are structured around that, the regulations apply to it differently. But Bitcoin kind of comes in with this different box, and it's structured very differently because Bitcoin didn't launch with a token sale. There's no company issuing the asset, no centralized leadership team. And because of that structure, regulators in the United States have treated Bitcoin pretty fairly. They view it as a commodity, not a security. And the CFTC, they even came out and they said that Bitcoin is a commodity, and the SEC indicated that it's not a security. So regulatory clarity is one of the largest reasons why financial institutions have been comfortable interacting with Bitcoin, right? You have BlackRock, you have Fidelity, all of these. All these companies, they're launching these huge ETFs after Bitcoin had received that regulatory approval here in the United States. And what that had unlocked for it was it allowed investors to gain that ROI exposure to Bitcoin. So that was the unlock, was the regulatory compliance kind of jurisdiction over it. That was essentially what kind of secured its legal status here. Another thing, and you guys did mention it, 2021 El Salvador made Bitcoin legal tender, right? And businesses were required to accept Bitcoin alongside the US dollar with their merchants. But the International Monetary Fund kind of jumped in, and then they took away that legal tender right with it. But Bitcoin can still be used in the country. It's just voluntary rather than mandatory.
And they don't use it very much.
Yeah. So that's really what I have with it. They're treating it as a commodity. I'm not sure what's going on over on the other side of the lake in Europe and China, but at least here in the Americas, this is how we're viewing it.
So Japan recognizes Bitcoin as legal property. South Korea is active regulatory regime with transparency and AML obligations. Singapore's crypto-friendly regulatory framework, clear consumer productions and licensing pathways when it comes to Bitcoin for Singapore. In Vietnam, it passed a digital tech law recognizing crypto assets like Bitcoin. Brazil, Bitcoin is not banned. Antigua and Barbuda, Digital Asset Business Act licenses exchange wallets and custodial services, so Bitcoin is good there. With countries that are restricted, so Canada doesn't recognize it as legal tender. India, there's no ban, but crypto laws and tax rules do exist. Russia, Turkey, Qatar, Saudi Arabia, Argentina, and Colombia, Bitcoin may be legal to own or trade, but banks and financial institutions, they're restricted. And then there are some countries that are banning it. So that's your legal landscape right now for Bitcoin. Where would you like to go next? Crypto Wheel, anything you want to say? You feel like I see your eyes moving there.
Now, again, with the, I have like a whole, it's totally, you guys hit everything. I feel like, I think that I think.
Okay. So like Bully stirred the pot a little bit. Let me ask you guys a question. The question was the journey to $1 million.
Oh, I have a whole thing.
Right.
I have a whole thing on that.
I'm actually really happy you brought this part up.
Well, I mean, you stirred the pot, so I figured I would. These are questions that were asked, so I'm asking.
Would you like to take a nab at it?
I gotta find it in my.
Control F, I think, maybe.
Oh, I should. Yeah. Oh, let's see.
Yeah, Control F.
Maybe I can jump in.
Yeah,
Go ahead.
absolutely.
So how does the token actually obtain its value, right? The way that it's behaving now, it's not driven by people utilizing the operational usage of the network. The majority of the demand from Bitcoin seems to be coming from people choosing it to hold it as an asset. People are buying Bitcoin because they think it's going to appreciate in value. It can act as a hedge against inflation. Maybe they'll call it digital gold. So the main economic driver of Bitcoin today is holding behavior, not operational efficiency or dependency on it. And I think that because of the way that it is obtaining its value, it's primarily speculative demand rather than infrastructure demand. So with that with that type of demand, there are trade-offs with that. Yes, there is a huge narrative, huge community behind it. People love it. People really believe in it for all of the reasons that I said above. But there are cons to a narrative-driven type of demand. Interest rates are going to affect it. Speculation of wars are going to affect it. Elections are going to affect it. Who knows? Who knows what is going to affect this? Stock market will affect this. That's the type of demand that we're currently seeing in the way that it behaves, from speculation rather than operational usage. Could it go to $1 million? Maybe, possibly. I think that there is a place for it. I don't know what the narrative is going to be like in 2030. I can't say it can't go to $1 million because I can't predict behavioral patterns. I can't predict what retail is going to think about an asset. I think that there's a chance, as likely as it could go to $1 million, I think it could go the opposite way. I can't predict retail perception. That's not something I can do. Is it possible? Who am I to say? Maybe it's possible, but you can't really track that type of demand.
Do you want to add to that?
No. So I think that I don't think it gets to $1 million, not anytime soon. I think that, I could go into a lot of detail on why and why not I think that, but paraphrasing here, I think that it is very much retail driven and kind of hype driven and Michael Saylor driven. I think that it's theologically possible, but I feel like we're not going to get there anytime soon, if that makes sense. And if you want me to, yeah.
Everything is hype driven. Everything is speculative. The entire industry, our entire financial industry, is based on projections and budgets and adoption and whether or not we're going to have macro and economic factors that are going to push our economies down. I think that the ETF inflows that are happening, well, right now outflows, but the ETF adoption for Bitcoin has shown to be real. I think that the government saying that it is going to be part of the Bitcoin crypto reserve for, I don't know, whatever he's calling it these days, proves that this is something that is coming into place. I think that the global adoption will continue to grow. It's funny, like for me personally, when I have this conversation with people, I feel like I just changed the word in my mind. Like, so I'm using Bitcoin right now, but I'm saying the same freaking things to other people about a different project. And I think that the fact that the ETFs and the governments are coming on board, yes, I understand. We didn't even talk about Christina, whatever her name is, the girl from EU, Lagarde. I understand that EU has said no. Question: I do have my own reservations, but those not the same reservations, but I think that if I was to weigh it as a investment use case only for me, to deny Bitcoin is to do yourself a disservice in the crypto space, in my opinion. I know you want to say something. Go ahead, man.
I think when we also talk about what the potential of the price could go to, we also should be talking about, total addressable market or the demand for it. Bitcoin is different than most other utility projects that we look for. We typically are able to measure like transactional volumes for financial infrastructures, cross-border payments, AI data, real estate tokenization. Like there's actual data and statistics to back that. But Bitcoin is competing as a store of value, right? People are comparing it to gold. So when we're trying to analyze what the potential market for Bitcoin could be, I mean, your gold market, $13-14 trillion. So if Bitcoin does capture a portion of that value that's stored in gold and they bring it over into this ecosystem, maybe that's kind of an expectation of the type of demands that could flow through it. But that's essentially what I'm seeing is that we're trying to measure the demand based on the value of assets that people are trying to store their wealth in currently, not necessarily transactional volume that you would see in cross-border payments or AI data, things like that. So it depends on how much, competition for global wealth storage does flow into there, right? How many people decide to hold Bitcoin as long-term stores of value when you compare it to real estate or gold, things like that. So the TAM, I think, is a little bit different than what we've experienced before.
I mean, just based on what you just said right there, 13 trillion divided by 21 million, which we know we're never going to see 21 million circulation because people have lost whatever it was, 1 point something million. But let's just say there's 21 million in circulating supply. Eventually, I think that's 2140, 2130 in that range. I mean, if it takes over the gold purpose, you're looking at $619,000 per Bitcoin,
which is huge.
Massive. If that's just
huge.
If that's just gold,
right?
I think there's a lot more value than that.
Yes,
but
possible,
that's
yes.
just gold. So
yes, very likely possible.
So if you're talking about numbers, and again, we don't really usually do numbers. I think this project is a different beast. So I think it's important to see this is where we're thinking. This is why we're thinking the things we're thinking. So based on gold only, if it's going to be a digital gold, 619 is what we're more or less what projections could look like if it truly is going to take over the gold use case.
And some other things too. I mean, that's not the only thing that it would need to get to $1 million. There's a lot of things that could and might happen. I think if you look at Michael Saylor's thesis, that's a great way to go. So let me ask you guys this one next question. Mm-hmm. Do you think that Bitcoin can go to zero?
No. The only caveat is the files that are going around. That for me is the only black swan.
I don't think I could ever speak in certainties. You
better find a solution for your bond market then.
Well,
and your ETFs and your coins.
We do agree that primarily it is narrative driven. Who are we to say that the narrative doesn't ever flip negatively? I don't know. If people are treating this as a store of value and that volatility is not necessarily acting as a store of value, maybe I can't say that that confidence in Bitcoin will never get cracked. I can't speak in that certainty. I don't know.
I mean, no. Okay, you can't say certainty. Okay, sure, I take that back. You can't say no fundamentally. But in the same way that Nike is likely going to be around and iPhone will likely be around in 10 years. It's first to market of its kind. It is an absolute juggernaut and has a stranglehold on the crypto industry. As Bitcoin rises and falls, at least right now, so does the entire market. It is literally, what's the market? I hate this. I don't normally use this word. What's the market cap of Bitcoin right now? Somebody put it in chat.
21 million, I think. No, wait. No, no, wrong number. Hold on.
We're at 19.3 million-ish in circulation. It's at 67,000. Someone do that quick math. Or 65,000 since oil is, we're at 1.3 trillion. So how many, if you think of it from just like a investment opportunity, how many things can you, 1.3 trillion? Yeah. How many things can you invest in today's market that has a $1.3 million valuation that you can honestly say is going to go to zero tomorrow?
Well, this is so interesting because if we try to pay attention to pattern behavior and history, the first ones are never the ones that actually end up making it. You have AOL, Napster, LimeWire, MySpace, Netscape. Where are they today?
I talked about the projects before.
Is it possible that it follows history, or is this truly the outlier? Who knows? But
we talked about the projects before Bitcoin. I went back to 1950. Like, Bitcoin is not the first of its kind. It is just the one that took all the technologies, brought it into one perfect package. Well, perfect at the time. And then here you go. That's what Bitcoin is. This is what it's been created. There are failures. There's lots of them. B-Money, eGold, I forget the other ones right now, but like there's a bunch that failed before Bitcoin.
But the scary part about all of those failures is they have something in common. They were early, they were all dominant at one point, and eventually better systems replaced them. All of them have that in common.
Okay.
Now, how many boxes can you bring that over to here? I
heard an analogy, and I actually think it was Crypto Glenn that said this. You don't need your Rolex to be a Swiss Army knife, right? Like, there is a place for a Swiss Army knife, and there is a place for a Rolex. And that doesn't mean one is better than the other. They just use the different things.
So, my turn. Oh. So let me put this into perspective for you. So the whales, so I have a whole theory on Bitcoin, and it's definitely different than what you might think. So 51% of the whales own Bitcoin. So that is intentional because they own the majority. Think of it as like a stock, who owns the majority of a business. There's a majority that owns a percentage of Bitcoin. So in order for Bitcoin to go to zero, these people who are heavily invested into Bitcoin would all have to sell, but it's a control thing. So it's a control mechanism. So that is very unlikely to happen. But I do have some scenarios that could potentially send it to zero. I also have some scenarios that could send it to 1 million. But so let's see. Bitcoin has already survived crashes, 70 to 80%, exchange implosions, regulatory crackdowns, environmental attacks, internal civil wars, and endless predictions of its death. So when people ask whether Bitcoin can go to zero, the real question is not whether it can crash hard, it can clearly, but what kind of event could make that happen? So from a technical perspective, one path to zero would be a genuine break in the cryptography or core protocol. We could also talk about quantum computing, and we should probably go there too. If a flaw were discovered that allowed coins to be forged, signatures to be faked at scale, and consensus to be broken in a way that the network could not repair confidence, that would hit the root of Bitcoin. So this also touches on quantum computing. Quantum computing is the most discussed version of this threat. If a large-scale fault-tolerant quantum machine arrived for Bitcoin, this could migrate to quantum-resistant signatures, exposing addresses that could become vulnerable, and trust in wallet security could collapse. A cryptographic software bug could also do real damage, especially if it produced inflation beyond 21 million cap or permanently fractured consensus. Bitcoin has had bugs before and survived them because the network was smaller and community coordinated fixes quickly. But if a failure bug triggered a messy, political constructed chain split where no version retained clear legitimacy, that could do something more serious than just a normal fork hit. it could break the shared belief that Bitcoin's rules are stable and final. So that's one way that it could. There's also the risk of social and consensus split that turns into something deeper, a temporary civil war, if you will. Bitcoin has already gone through governance fights, most notably the block size wars, and came out stronger. But if you can imagine a future split where exchanges, miners, ETF custodians, and developers are all using lineup behind competing versions of Bitcoin and neither side clearly wins, then the asset fractures into rival climates, the real Bitcoin brand, and then conflict destroys the trust and immutability of the monetary policy or settlement finality, and a huge amount of value could evaporate. So yeah, there's another one. There's the economic perspective, and then there's the replacement risk, and then there's political and social, which you guys were kind of touching on. And then another social shock would be a major move from Satoshi's coins. The roughly 1 million Bitcoin associated with the early mining era fraction almost like a ghost reserve over the market. If these coins suddenly moved, it would trigger a massive speculation. Is Satoshi alive? Are the keys compromised? Was the original story false? Is a huge sell about to hit the market? Even if networks itself remain functional, the informational shock could be severe enough to crash the confidence. So there's a bunch. There's actually a lot of scenarios where Bitcoin could go to zero. Yeah.
So a lot of what you said is the same for any project, or most, I should say. For me, it was you could do one of two things. You could break the wallet, or you could quantum risk Bitcoin mining. Wallets, you have a public chain, you have a public key and a private key, and then they could potentially affect that. That's kind of really what I see as the only way in for quantum computing. The Bitcoin mining, they say they're 10 to 20 years away from actually doing that. So. And even then, the amount of compute power needed, I mean, we're talking like government level. So is it possible? Yes, but anything's possible. That's the whole like, what if I fall off a cliff scenario? Well, if you fall off a cliff, you fall off a cliff. There's nothing we can do about it. I don't think it's an imminent. Personally, I don't think it's an imminent thing that's going to happen. I think it's technology. The way the proof of work system happens, the mining, I think that built-in security layer with the hashgraph technology is it's decades away from of being a problem.
But it's just like anything. When we talk about the road to 1 million or the road to zero,
sure.
Possibilities, anything is possible. But I think what they're discussing is probability. And that's maybe something we could track a little bit better.
Sure.
Don't know.
Yeah.
And in all honesty, even quantum computing with being in 20 years, there's things that they can do to upgrade and combat that as we go. It's not a jump from like Bitcoin never fixes itself to quantum computing. It's just like the internet is now. It's always, the scammers are always trying to crack it, and they're always trying to block them. It's that give and take all the way, I would say. So, and here's one of my theories. And actually, this is my theory for Bitcoin and cryptocurrency in general. So who was the guy that said, if you knew who was behind Bitcoin, it would go to effing zero? So
what's his name?
He's very...
I love him.
What's his name?
Pena.
Yeah. So my theory is that it was governmentally made, but I take into consideration how the media and how, let's say, you're programming through the media, schooling, all these things play a role into this whole system. So Bitcoin was developed as a decentralized means for us humans, right? So what better way to pitch it to humans as humans, us, the layman everyday people, of course, and you hit it in 2013. So this was all happening behind the scenes. It was all being developed, it was all being done, and then boom, in 2013, it was this new thing, this decentralized thing. You're going to be your own entity, your own bank, your own everything. The government isn't going to own you anymore. And so everybody's like, wow, this is great. Let's jump on board. But what I see coming is that's the way to adopt it, right? So this decentralization is actually going to turn into control. So this is, everybody's going to jump on board, everybody's going to be part of it, and it's going to be transparent, but it's also programmable. So everything about us that we were supposed to be decentralized with is now going into a programmable era. They're going to be able to program our money, our health stuff, literally everything. So I feel that if people did understand and know what Bitcoin and cryptocurrency in general truly was, it would go to zero, because it's just the opposite of what they claim it to be.
That was awesome. It's true. It's true, though.
Thank you.
It really is, and I think it's the entire fourth industrial revolution. It's your AI, it's your blockchain, your CBDCs, your quantum computing. We have this illusion that this is kind of freedom for us, but regardless, I think that it's actually bringing the chains in.
Just wait and see once regulation starts hitting and once the things are being implemented. Okay, let's just look at it as simple as this. The new 1099-D form that comes with your assets on on exchanges, the KYC level, that's not decentralized. That's not a DeFi. That is centralized. You have to confirm who you are, your identity. Nothing is free in this world, and the government is not going to allow us to get away with it. And this is the end game for control. Bitcoin started it all. It was the government.
I'm gonna go way before Bitcoin, but yes, I think is it
absolutely. Exactly. This started a long time ago.
It's just a new technology. That's all.
I mean, let's hope and pray that you and I and the rest of our people who know and love us and trust us are getting ahead of the game, because that's what we're here to do, is try to, be part of or get ahead of, this, and maybe somehow be a little bit more safer. But in the end, it's really all a chess game.
So I agree with that. I mean, we're kind of we're going away from the Bitcoin. I want to bring it back if you guys don't mind. Like the same is true to Bitcoin, what we're talking about right now, as any crypto asset. It doesn't make it good. It doesn't make it good. It doesn't make it bad. It is what it is. This is where the cards look like they're lining up. However, when it comes to Bitcoin, in terms of utility, obviously, where we all feel or what we think. Do you guys want to do a conclusion and then bring up Glenn?
You want to do pros and cons?
Conclusion, pros and cons. Yeah, let's do it.
Caveman.
So I kind of talked about my pros and cons earlier. I misplaced that, but I'll just say my conclusion. You guys can do pros and cons and conclusion. I don't view Bitcoin as a highly speculative asset. I don't. I view it as a hedge to the leaders that continue to not have our best interests at heart. I think right now it is a tool with direct utility that can hold a large amount of value. The amount of value is its actual utility. It is a store of value and a hedge, but not a day-to-day currency or a transactional instrument. Just like you wouldn't walk around, like I said, the brick of gold. My caveat, like I said earlier, is I will until proven wrong. I will be concerned with what's happening in the files right now and what the effect is on governments and institutions with fiduciary responsibilities. If they look the other way, for whatever the reason, it doesn't matter, like whatever you think, then I think it will be, continue as it goes. If they, for whatever reason, they don't want to look the other way, then I would stay cautious. And I think it's important for any investment, by the way, not just Bitcoin, literally across the board. You should always be looking to see if you do not, if there are signs that there is something wrong, you should probably look at those signs. If they turn out to be nothing, great, keep going. For an investment, the days of old, I don't think you're going to see I really don't believe you're going to see the crazy gains that we saw in like the early years. I think we are talking about a 10x potential. Not well, from here it's more than a 10x. Call it I don't know, what is that? What are we, 65,000? So do the math. If we were at 100,000 right now, it'd be a 10x. Personally, myself, this year, I will be DCAing back into Bitcoin. I want it to be somewhere in the vicinity of 10% of my portfolio. I don't normally talk about these things, but I am in this one. And the reason against my other projects that I'm invested in case that timeline is extended. That is it. That is the reason. I'm not being influenced by anybody. It is based solely on what I think the value is, where I think it's going to go, and a hedge against my other projects. That's it. Go ahead.
You want to go, Bully, or you want me to go?
I'll go. I think that there are a lot of pros to it, but like any other asset, this is a utility show. My cons really kind of come down to the tech stack and the perspective of utility. The pros for it, decentralization. I think that that's huge. Fixed supply, right? 21 million coins, huge. First successful cryptocurrency out there, absolutely huge. Regulatory clarity compared to other crypto assets, absolutely huge. My cons, evaluating this asset from a utility perspective. The things that I consider is its speed, scalability. I'm looking at the transactional cost when the network is congested, the energy consumption. As I was saying earlier, its actual operational usage. Most institutions are not currently using Bitcoin as infrastructure for their payments or their settlement layers. A majority of the demand is coming from investors who choose to hold the asset. I look at its white papers, originally designed as a peer-to-peer electronic cash system, but the real-world behavior today primarily is proving to me that it's an investment asset rather than a payment system. I don't know. I think the narrative could be good and bad for it. That's a pro and a con, is that it's narrative driven. You have institutions participating, but it's coming in the forms of your ETFs, your custody, your derivatives markets, your balance sheets holding. So again, it's investment exposure rather than operational dependency or infrastructure. So that's kind of where I stand with it. I would say that because I don't think we're in a utility-driven market. I think the Clarity Act is going to change that. So because Bitcoin is the godfather and it is pushing everything else, and we are still currently in a speculative market, and I perceive Bitcoin to be a speculative asset because that's where its price is originating from, then under its current frameworks, I'm going to rate Bitcoin probably a 7.5, maybe 8. Yep.
Oh, I gave it an 8 too, actually. That's
yes.
crazy.
I'm going to rate it that. I'm going to rate it that high because of where we currently stand. We are in a speculative market. I don't know what happens to the speculative assets when we shift into a utility-driven market. I don't know what happens to Bitcoin if or when something something ranks above it in terms of market cap. I don't know what happens to a speculative asset when we are in a market that's driven from utility. When I can see that, my rating on it might change. I do not own Bitcoin. I'm not against owning Bitcoin. Like I said, I don't know what the risk is of holding a speculative asset as we shift into a utility-driven market. I am looking for the core as a utility maxi. I am looking for the utility-driven projects that are being embedded into core infrastructure, and I want that reoccurring demand. I don't want the optional demand. I want the reoccurring demand. I want it to be placed, embedded into the core infrastructure of our traditional financial systems. That is the type of investments that I am looking for. So I would rate it that high.
So just Johanny, I just want to, I know, bear with me. So she says Bitcoin is an investment asset, XRP is a payment asset. Just to define something, I agree with Bitcoin as an investment or store of value, but XRP is technically a cross-border payment asset. Like it's actually not a finality, it's a transitional. So maybe not payment isn't the right word. So for me, I too did 7.5 for Bitcoin. I think the good things are the fixed supply, the network effect, the institutional legitimacy, its resilience, because clearly it can go through some cycles, the security, political and regulatory risk is one of my cons. Energy debate is one of my cons. The global hard asset, as far as gold, I think there's some competition there for it, as far as gold, government bonds, and real estate. So yeah, 7.5 for me. But I think another important thing that we should touch on is something that Caveman did talk about. So I'm not telling anybody how to invest or when to invest or what to invest. But if you look at the cycles, the Bitcoin cycles, traditionally you have a bear market, and through that bear market you are accumulating. And the first thing to run is always Bitcoin. And then from Bitcoin, it's usually Ethereum. And then from Ethereum, it's the altcoins. And that's kind of where we're going into now. But strategically, if things continue to go the way they are, not with the utility tokens, I'm talking strictly the cycles in the market, then you would want to invest into, at its low, Bitcoin, then Ethereum, and then alts, if you wanted to make the most bang for your buck, because that's how the cycles run. And also, I would say another strength that Bitcoin has is its halving cycle. So that is one that I would add to it.
After all of this research, do you guys view it as a utility asset?
You confuse me. You just gave something an 8 out of 10.
Me?
You pooped on it, and then you gave it an 8 out of 10.
What I did was I had to, as a researcher, I have to look at how the asset is currently behaving today. I'm not interested in hypotheticals. I have to pay attention to how the asset is behaving today. I don't see it fulfilling the white paper. I don't see that. I rate it that high because we are in a speculative driven market. And I don't think that it's a bad thing to have that in a portfolio. I'm not saying that it's a bad investment. I can't come to the conclusion that this is a utility driven asset. I'm viewing this as a belief, a narrative, a speculative asset. So that belief, narrative, speculative driven asset in a speculation market is doing pretty good. But this is a show about utility. Is this a utility asset in your guys' perspective?
Yes.
Yeah.
141
so another thing
billion.
I will say about this is most assets are retail driven or narrative driven, or like we are kind of the hype cycle for most of these assets, whereas Bitcoin is not driven by retail. It is absolutely driven by institutional money. And I think that plays a different role in that speculation as well. But utility, I hear what you're saying. If you're saying, is Bitcoin used for its intended utility purpose? The answer is no. It is not what it was designed for.
I also I can't expand my definition of utility because something has value or you can transact with it. That's not my definition of utility. I have to have a much stricter one, because if that is my definition of utility, then meme coins have utility. Meme coins are utility projects. I also don't think that because institutional onboarding is parking it in investment vehicles or treating it as an investment asset, I don't view that as utility as well. I look at the technology and the fundamentals and how is the asset behaving. That's where I kind of sit there and I go, I don't see it as a utility asset. I view it as a speculative asset. But, guys, at the end of the day, we are all educated investors, even the viewers. You guys are entitled to how you perceive it. I think that's the beautiful thing about this show is we all come from different perspectives. We all present different research in different ways. And you guys are all free to kind of view the market the way that you view it. Hopefully, you guys learned at least one thing new. They had 3 hours worth of research, and it's amazing. We all seem to we're on this side of the table in terms of, investing in these utility projects. And we still, even on XRP, XLM, all of them, we still have a different perspective on it. And that's the beautiful thing about it.
Yeah, agreed.